Right, hello and welcome to Camel Finance. I'm your boy Camel, and I think we may have slipped into an alternate timeline. If you're not convinced, then let me convince you, right? Snoop Dogg is giving up smoking, okay? That's the first thing. The second thing is, apparently all we need is one more credit downgrade, and new highs are in the bag. And if you're still not convinced, we even have Saylor having seemingly lost his ability to rationally justify holding Bitcoin. Take a look at this. This is my absolute favorite all-time Saylor clip, without a doubt.
But when you go all in on something, I would say that does take conviction. Now, your conviction might be
How many
coming from
chairs are
first
you sitting on
principles.
right now?
One.
Are you all in on the chair?
I am all in on the chair.
Like the point really is you put on one pair of glasses, you've got one pair of AirPods right now. You're looking at me through one screen. You're using one microphone. That's one microphone. Like, you trust it? Is that conviction? Seems kind of scary. Why don't you diversify? Why don't you use 10 microphones? The point really is things in your life. Do you drive in 10 cars at the same time or one car at one time? Do you drive down one street? Aren't you afraid that you're driving down one street? Do you take a different way? You know? So my point really is, if you're you get on one airplane, are you convicted? You put your entire family on the one airplane, aren't you afraid? Ultimately, if you're a rational individual, when you use knives, do you have copper knives, wooden knives, steel knives, aluminum knives, rubber band knives, diamond knives, because you're afraid to commit to the right knife? It's a tool.
Oh, I'm dead. I'm dead. Oh. All right, so as you can see, alternate timeline confirmed, but we're going to do our best to continue on as always. So, look, the big news of yesterday was the jobs data came out. Initial jobless claims came in at 231k, which was hotter than the 220 estimate. We also had continuing jobless claims, slightly hotter than expectations and the prior readout, and the manufacturing index came in at negative 5.9 versus negative 9 estimate. And again, speaking of alternate timelines, right, bad news remains good news for stocks at this moment in time. Risk on continues to happen very, very quickly, and you can see the RSI has jumped from 26 on October 24th now to 79, okay? So in no time at all, massive risk on moment, massive follow through of relative momentum in the markets. And we're doing so in such an incredible fashion that we're leaving gaps behind on the chart, right? And now a lot of people think gaps always have to fill. Most of the time they do. But believe me, they don't always have to. And if you take a look at the most important ETF in the world that shows the S&P 500 has enjoyed 4 large unfilled gaps in only 3 weeks. This is not something we tend to see in ongoing bear markets. And if we take a look at prior times this has happened, performance walking forward is significantly better than expected most of the time. In addition, more data in our favor for new highs shows that years we were up more than 10% at the midpoint of the year tend to chop around through August, September, and October, which of course we've seen. But the good news is they also tend to see solid upside into the end of the year. Again, tells us to keep an open mind about better than expected outcomes throughout the remainder of 2023. And what if, indeed, we are about to experience what the Dow did back in 82 to 83, a melt-up happened back then as well. Back in the early 80s, the fight against inflation was over for good. The Dow Jones managed to rally almost 70% in a little over 12 months. Are we going to see a somewhat similar move over the next 12 months? And not only is the backdrop pertaining to inflation potentially similar, but we also have price action looking somewhat similar as well. You can see on the left, you've got the Dow Jones in the 80s. We had inflation come down and stay down, notice around a 3 handle, whilst the Dow Jones enjoyed a 70% upside rally. It's a similar setup today, currently sitting on a 3 handle. Inflation has come down. All we need it to do really is hold, and potentially we could see this same pattern right here launch us in a very similar manner. Perhaps we could see as high as 45,000 on the Dow. I think probably 38.2, that measured move target, would be enough. I think something like this, followed by a rollover and an inflationary bust, would be fine. That would be in line with my expectations that I've been talking about since I've had the channel. One day at a time, as always. But one thing I do like, and I've been talking about over and over again, is this peak in the VIX. seasonality, of course, sets us up for a massive downside move in the VIX, which is typically correlated with an upside move in the S&P 500. Fast forward to today, and the seasonality is playing out perfectly. So that is another tick off in our favor to see all-time highs at the end of the year. We've also got this 2-year Treasury bond moving below the Fed funds rate. Now, whenever this happens, what we see is the Fed funds rate stay on a pause for a little while and then the cuts ensue, right? Stay on a pause for a little while and then the cuts ensue. Stay on a pause for a little while and then the cuts ensue. This pause enables the market to rally, doesn't it? Again, another tick in our favor that says we've got the space to run the all-time highs before something breaks or before the Fed decides to start cutting, and then we will see these both roll over. And of course, that's when I think we go deflationary bust, as I've been saying over and over again. And yet another tick in our favor is that soft landing is becoming the consensus view. Remember, as the market continues to rip higher, more and more bears have to capitulate, right? You can be bearish until all-time highs, and then once we get through all-time highs, everyone has to accept that we're at no all-time highs, okay? And it's no longer time to be bearish. And only once the final bears have capitulated in at the all-time highs, right? Once we're through here and absolutely every man and his dog is bullish, that is when consensus view becomes undeniable that, well, there is indeed a soft landing, okay? The Fed managed to pull this off against all the odds, and here we sit at all-time highs. Of course, that is when 100% of retail market participants are in the market, and that is when we get the top. Why? Because retail always buys the top and sells the bottom. It does not manage to short the market right before a major 2008 style crash. So another tick in our favor is that we do have this soft landing as the consensus view. And take a look at what this means historically, okay? When we get these spikes in consensus that we've got a soft landing, you'll notice that as they roll over, we enter the recession. As they roll over, we enter the recession. Same deal here on a much smaller scale. This time starting to roll over. Tells us that recession is not too far away. If I click through to these other images, again, here's another example, right? It always starts off looking like a soft landing and then we get that recessionary period. Starts off looking like a soft landing, then we get the recession. Same here. Is this time going to be different? I don't think so. I think we see a rollover in this blue metric, this one right here, soon, and then we get that recession somewhere between, say, the end of Q1 and the end of Q2 of next year. And just to be clear that this absolutely is consensus, 74% of participants, of market participants, think that we are in for a soft or no landing, versus only 21% of market participants thinking we're in for a hard landing. So it is officially consensus that the Fed has engineered a soft landing. It is officially consensus that the way to harm the most amount of market participants is indeed to have a hard landing, right? So again, another tick in our favor. Hopping into here, we've even got Jim Cramer saying the economy is heading for a soft landing. You know what that means, okay? You know what that means. Here he is, telling us that the economy is heading for a soft landing and the easy money has already been made. So the two take-home messages here is, one, there is not going to be a soft landing because this guy is always wrong. And two, the easy money has not yet been made, okay? He's trying to discourage people from capturing the last blow-off top portion of the rally. He's telling us the easy money has been made when in fact it hasn't. We should in theory be in up-only mode now until new all-time highs, and then it is time for that hard landing so that he can be wrong about that and wrong about this. What a time to be alive. Have we slipped into an alternate reality, an alternate timeline? I think it's possible. Meanwhile, in the realm of Bitcoin and cryptocurrency, a CBDC tracker launched by the Human Rights Foundation and the Bitcoin Policy Institute allows you to trace the development of CBDCs in 119 countries around the world. So perhaps take a look at this in your own time. Meanwhile, we're seeing the likes of the digital euro start to build steam. Take a look at this clip from Christine Lagarde.
The digital euro is on the move. Yesterday, the Governing Council of the ECB approved the opening of the preparation phase. It will be a journey, and we will walk the journey together with the legislator. All European institutions will be involved to make sure that Europe is equipped with the currency of the future. Cash is here to stay. You will have all options, cash and digital cash. So what does it mean for you? For consumers, it would be free and easy to use everywhere in the euro area. All of that, of course, is subject to the legislative process. Cash or digital, the choice will be yours.
And of course, they start by letting us know that cash and digital, the choice is ours. But once they've moved us onto a digital system, they can quite easily remove the cash if that's what they decide to do. All I know is you probably want to have some anti-fiat instruments such as Bitcoin in a cold wallet and physical gold and physical silver as an exit to the system. In other news, Tether is planning on spending $500 million to become the world's largest Bitcoin miners. They've got mines in Uruguay, Paraguay, and El Salvador, and they aim to grow their share to 1% of the total Bitcoin hash rate. I found this weird and wonderful looking chart from T-Analyst, and I wanted to share this because just assuming we stick inside of this, okay, this curve is going to be incredibly steep and takes us well above 200k. So is this on the table or isn't it? That is to be determined. I'm not going to spend too much time on the charts because we'll do a deep dive over the weekend as always, but the dollar is still heavy. The 10-year yield officially broken down now as expected. So happy days, happy days, happy days. Bitcoin is hanging around inside of this wedge and it's still on its grind. So it could certainly roll over and make a decline towards this daily and weekly cycle low. Maybe it has one or two more little pumps in it. Maybe we could see something like this. That is to be determined, and then we're going to get that decline and a rollover into the cycle low. So keeping an eye on that. Stock market is still completing its breakout, isn't it? So here's the S&P. Is some level of pullback before we move higher reasonable? Yes. In fact, are we in the neighborhood for a half cycle low? Maybe around day 20, which would put us for a half cycle low somewhere around the 27th of November. So be open to that. Nasdaq got some gaps, but still blasting off. So long and strong continue to push. And the Dow Jones still looks pretty strong to me as well, doesn't it? No doubt that is a breakout and a go. So we continue to target the measured move up at 38.2 for the Dow. Notice how it's Friday, and what happens on the Friday is the VIX gets crushed by the Federal Reserve, which has a massive short position on the VIX. So we're going to continue to see the VIX get crushed, I suspect. Russell 2K working on some kind of back test of the breakout level and hopefully a resumption into next week. Crypto related equities still kind of grinding around, aren't they? So we'll see if we can get some strong closes to the week. That would be nice. Other than that, I think the standard model applies for the Camel channel, and that is long and strong continue to push. I notice how the oil is massively down yesterday, you can see, so this is just accelerating to the downside. Happy days, keep short in oil, as I can see there. And gold looks like it has confirmed a swing, so we'll see. We'll see if it can roll over and left translate, meaning it peaks early and then rolls over, or if we can get up to the all-time high, we'll think about buying an all-time high break as if it can occur. Silver starting to look more strong now, isn't it? But again, for me, the risk reward still isn't there. Get above this level here, and that opens up the next one, and above the next one, I think we can see a quick and sharp run to $30. So I'll be interested in taking this trade out of here and targeting at least $30 and then beyond to 40, 45 and 50 if we can get a breakout of this massive red one. But it's got some work to do. I don't really believe it as of yet. Always one day at a time. I hope you enjoyed that. I hope you have nice plans for the weekend. I hope you're doing well in life. And as always, I'll be back on Saturday with a weekend video. I'll also be putting out a members only video on Saturday as always. So look forward to that. And I have left you an update on one of the trades as I think it's time to take profit today. So make sure you check that out. And in the meantime, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.